Maximize your yields while spreading out your workload with the earliest maturing winter cereal. Visit kws.com/CA to see how our hybrid rye varieties can work for you. High yields, high quality, high value for your farm. KWS, seeding the future since 1856.
Okay, let's talk some markets. We're joined right now by a first comer to Real Ag Radio. Looking forward to this discussion is Jody Lawrence. His company is Strategic Trading Advisors based out of Nashville, Tennessee. Jody, great to meet you.
Well, Sean, thank you for having us on. It's great to be here, and always enjoy this event, and glad to be a rookie on the show. So this is awesome.
Great stuff. Well, you reside in Nashville now, and one of my wife and I's favorite cities to go visit. What's your favorite spot on Broadway?
For a meal, it's Merchants. Unfortunately, they had a fire and they're still closed.
But they've had multiple fires.
But the food there is spectacular.
I've been there a couple times.
Yeah, just as far as when we're down and entertaining people in town, Eric Church's new bar that opened up is fantastic, and it's got a confessional next to the bar, so you can go into the confessional and order your drink, which I think that just tells you all you need to know about going down Broadway, in Nashville. But it really, every place is so great because it's just unbelievable. You'll go to a concert and you'll see just pick any artist that's famous. We love Ashley McBryde, and she's so talented, and she does everything. And then you go into these little bitty hole-in-the-wall bars, or you go to Alan Jackson's, or AJ's. You go to any Blake Shelton's bar. You go to any of them, and there's a band up there. And you go, how are these people struggling for tips? And probably just meeting their rent. Yeah, where's their break? And certainly not to diminish Ashley McBryde at all, because we love her and she's incredibly talented. It's just crazy, the separation between every bar's bands that are in there trying to get that one ear from somebody that gets says, hey, we want y'all on to do a demo for us.
You realize how hard it is to really make it.
Yeah.
Like the talent pool is so deep, because you're right. I've been to many of those places on Broadway. You walk from place to place and it's just sort of like, man, this band's good. It's a great spot. Really do love it and love. My wife loves Merchants, but the last 2 times we've been there, it's been closed, like you mentioned. Okay, let's talk the markets here. Some angst from growers. Looking at what's been happening here across the broader market. Of course, corn gets a lot of the attention. It is the market leader on the way up, and unfortunately also on the way down. We got a pretty good corn crop out there in the U.S., pretty good conditions, relatively speaking, and the market's responding to that.
Yeah, this is the hard part about production agriculture. It's very cannibalistic, because it's the only industry that I'm familiar with at all where when everybody is successful at doing their job, whether it's Helena and all the really smart people at the lab just down the hall that are developing these new products, to the farmer who is trying new ideas, who's got better stewardship or improving their stewardship every year of the ground to coax every bushel out of it, the salesmen who do a great job of explaining and doing it, to all the new genetics and the seeds. It becomes so cannibalistic, because when we get good weather like we had, and certainly Hurricane Beryl, you look at how that really, I've talked to everybody that got that rain, Illinois in particular, it's just like it's almost too wet, which I've never heard anybody complain about in July. Yeah. But the crop is huge because everybody has done their job to get it to this spot. And it's funny, you hear, I do a bunch of meetings for Helena and travel all over the Midwest and the Corn Belt. Whenever a seed guy comes up, they go, well, this genetic and this trait that we have, this bag has 300 bushel potential in it, and you're always kind of dismissing it as a little bit of a sales pitch, but that's what everybody is striving to feed the world as cheaply as possible. And if that's your ultimate goal, you have to remember that the cheaply as possible does come into play from time to time, and it works against everybody in production agriculture, whether it's, at the very top, whether it's Helena, all the way to the bottom of, you look at John Deere stock certainly not doing very well, and I know that equipment sales not, and you just work your way through the food chain of it, and everybody's going to suffer a little. But the thing that I'm finding that I'm still scratching my head about is that historically, because we did a big data search on a lot of different information about how quickly all of the fertilizer prices, the big ones that go on, nitrogen in particular, were usually about 4 to 6 weeks. Whenever corn made a big move up or down, all of those products, that price would follow. It would take about a month to work its way into the market. But now, you look at fertilizer, it is not commensurate with $4 December corn.
No.
Historically, if you look back through it, and then you look at land cost, because I can't buy a $25,000 100-acre plot, 25,000 an acre, spend that much money. I just can't make those numbers work. But the price right now of land rent, they're not going down, and it really comes to the overwhelming success of the agriculture industry, because what I caution everybody, because they go, okay, we got $4 corn, we got high interest rates, I'm sure my landlord's just about to call me to lower my rent, and I'm going, as long as the yields continue to go up, this is where a lot of your cost is going to be, because all the fertilizer, all the input people know you have to have that to produce enough to get that sustainability of income. And your landlord knows it. Whoever is bidding against you for that land knows it. And that's what is, it's such an interesting and sometimes very, very frustrating dynamic inside the ag market that it is cannibalistic.
We're going to need demand to pull us out of this.
Absolutely.
There's no other way about it. If the supply is going to be at where we think it's going to be on corn and beans, we got a pretty good wheat crop too, right? We're going to need demand, and I guess there's some questions about where demand's going to be.
Yeah, and the demand side of the equation, we talked about it all winter, and it's certainly been developing like this. And whether we being U.S. foreign policy to a certain extent have contributed to this, because I have no doubt that we have. You look at the two things that we always counted on, that the first major one was going to be China was always going to be our largest buyer. But political policy and this is not a party thing, this is, decades and decades of different administrations, and that, we're now on the wrong side of China. It's just about as simple as that. And the way I describe it is, if somebody was selling you something, would you go to somebody who's always in your business telling you that you're doing stuff wrong, or go to somebody selling the same product who says, hey, like you, thank you for your business, we're happy you're our customer? And that's how China and Brazil's relationship has exploded, and really, the market, the production side, we can always, when things go right, outproduce world demand. We've always known that, and
we're pretty good at that.
Yeah, unfortunately, we're really good at it. This year's going to be a perfect example. But in that policy shift with China, when China finally just had enough, and they found a willing trade partner, and I'm just going to say South America, because certainly Argentina and the smaller producers, the smaller countries down there, but Brazil in particular, that when China said, Brazil's, can supply us almost everything we need. We're still going to have to do some business, with the United States. That's inevitable, but we'll do far less. And Brazil's not going to tell us how to run our country, what our, internal and external policy is. And they are going to be, good friends and a trusted supplier for us. And that is what's happened over the last 15 years that really has kind of shifted everything. Although the best part about it now, I say the best part because, is that India is going to surpass China in population very quickly.
Yeah, but not an easy trade partner either.
No,
Like,
no.
if you thought dealing with China is difficult, let me introduce you to their friend India. Like,
Yeah.
they can be difficult too.
Oh, absolutely. Our two largest buyers, customers for North American bushels, Canadian and U.S. bushels, they are in a part of the world where they have got to deal with each other because they share a border, and then you have Russia in the middle of this. That they, the United States is not just somebody who can roll over there and be welcome every time we show up.
Yeah.
And India, their biggest thing, and simply because I've talked to a lot of people who travel over there, and of their religious, their sects, Hindu in particular, they're not eating meat-based protein, so they need wheat, and they're getting to the point where they're no longer self-sufficient. So you talk about some wheat imports, but when they will gladly buy from a neighbor, being Russia or Ukraine in the Black Sea area, it becomes very difficult for the United States to kind of wedge in that door.
Yeah. So when we think about, okay, the China market is difficult, and you explained kind of outlining the why of that. Even with India as an option or a potential, for growth there from an export perspective, it's not easy to diversify away from the size of the buying that China can provide. Like, you just don't find other Chinas, right?
Right.
Is this where domestic biofuel policy, especially when we look at renewable diesel and SAF, is this why it's so critical to develop that policy? To create that increased domestic demand, because there's not, the export side is so difficult?
Absolutely.
Okay.
I mean, you hit the nail on the head, because where that industry kind of got its foothold, in the USDA and the EPA, everybody made some announcements yesterday about how much bigger they want the SAF industry to be by 2030, and then by 2050. And 2050, sounds like a long, long time away, but all of a sudden, my relationship with Helen is almost 26 years old, so it's it's like, okay, that's a long, long. Well, it seems like 2 weeks,
Yeah.
But the best part about that is that all of the major players that have gotten involved in SAF, and we do need, and certainly everybody in agriculture does their part to, make a healthier planet. We know that, and whichever side you're on whether, global warming or not, we still have to have clean water. We have to have, productive soils. We can't just wear it down to where it's non-productive. So ag is always in the business of promoting a healthier earth, basically. And what we've realized through that, or what the industry was, okay, once the scientists came up with that, how to compound, basically, we'll just call it bean oil, although there are other vegetable oils in it. You can even use used cooking grease that we import from China to use. I'm not sure you think about that when you hop on a flight, that this may be, used cooking grease in this fuel that came from China. But you look at the scope of what that could be. And we've been very fortunate, because with all the meetings that we do, there is and it's really about a medium size. They're going to need about 36 million bushels of beans a year to turn into biofuel. And it's in Fremont, Nebraska. Brand new shiny plants, got that new biofuel plant crush facility smell, and it's right across the street from the Helena location. So I've gotten to know the guys that invested in it, that run it, and it's fascinating how they do it. And you think about that, okay, there are going to be 30 of these plants at some point, in the not too distant future, and this one is just opening for the fall. Their bases, they've added 25 cents to basis for beans. Not that this is the cure for all of soybeans, because we just need an internal demand. It's just like you said, whatever we're losing to Brazil, we need to be able to figure out a way to use it domestically. And that's where the SAF comes out, because that industry has got tremendous potential, and it's got all the right players behind it. You look at the Cargills of the world. You look at all the airlines that are adopting this policy and working towards that. And you look at who's really helped finance and get this thing rolling. You look at the Exxons. You look at the BPs of the world who are helping develop this. These people are not in this to lose money.
Yeah.
And they've got deep enough pockets. And the parallel that I always draw on the example is ethanol in the early 2000s was taken off like gangbusters, but it hit several different speed bumps along the way, to a point where you had overexpansion and you had a lot of plants close. But then when the major energy companies and the Exxons, BPs of the world realized that they had missed their opportunity at the front end, when it hit that lull, you think about everybody that came in and bought those, the shuttered ethanol plants that are now, mainstays in counties and regions as a buyer of corn, that this is moving much faster, and they learn from all their ethanol mistakes, and that's why this really, 2 years from now, and I don't think, however the U.S. election turns out in November, is going to have an impact on this, simply because of who is in the game. And when they can, all these people have all their lobby groups have plenty of money and really really nice bottles of bourbon to give whoever needs to make that decision, whether it's a Republican administration or whether it's a Democrat.
So if we do have the production number, if it does come through, let's just say we got a 185 on corn. Okay, let's just say that. I don't know where you see as a downside on the December future, but that's really it's lower than where we are today.
Right.
Okay, that's really all that matters. What do growers need to do or be thinking about to protect themselves from the downside risk here? Because we've still got 23 corn out in storage in parts of the U.S. That really hurts. Those people are not feeling. There's some regret. There's definitely marketing regret there.
Yes.
We're trying to make sure we don't have as much marketing regret on the 24 crop to compound that. So what are some things you're telling some of your clients?
The hard part in this, when we were talking during the winter, is that the opening day of trade, January 2nd, corn, beans, wheat gapped lower, and have not retouched the January high, have not even come close to it. That opening tick has been the high for the year on January 2nd in that overnight trade. And the hard part was that trade, that was, I think, 496.5. The January high for December corn was 496.5. All of the studies that come out of the University of Illinois and everybody's ag econ departments at all of the universities, they had the break-even cost for corn at $5.15, and the way they figured that is you're including everything. You're giving yourself opportunity cost. What could I rent my land for that I own, or what would I be paying for it if I had to rent it? Because I think a lot of operations, everything's been so good, and especially the last up until June of 23. We had a great run from middle of COVID, especially September of 20 to June of 23, that everybody in agriculture was really, really happy with how their bottom lines looked.
Yep.
And in that, unfortunately, we got spoiled because corn price was high, bean prices were high, there were weather events, some of the political tensions that are here now were not there. And when they were making money, they kind of felt like it'll bounce back. It'll bounce back. And whether they traded too much equipment or whether they didn't, pay debt down now that interest rates are high, there were a lot of different things that have kind of pushed us in really a really critical time during agriculture. And with that break even, if you include everything, at $5.15 a bushel, everybody looked at it after the last 2.5 years, or 3 years, that it was like, I did just fine holding my corn over, from September of 20 till June of 23. I'll get my opportunity. And what the market, its sole purpose is to, if we have not enough demand, drive the price low enough to stimulate more demand. If we have overproduction, drive the price low enough to where that overproduction stops, which is less planted acres. And, of course, this year, and you have to go with the USDA numbers, and I'm not going to make this, that's all I'm going to say about the USDA.
Yeah.
But when you go out and plant 91 million acres, and you're already, if you're treating all of the numbers fairly, and you're already underwater for, what your break even is, it becomes very difficult when you can't overproduce yourself to a point of profitability. And you look at where we are now, 405, 410 December corn, and I've talked to a lot of people, whatever their basis is, whether it's 50 under or flat, the board, that and it's like you said, there's so much 23 corn. One of the things I talked about during the meetings and all winter was, if I had called you on June 20th of 23, when the market peaked, and it hadn't, really hadn't looked back since then, and said, okay, here's what we need to do. I know your crop, the U.S. crop, and y'all were in the middle of the wildfires and the smoke in Canada, and if I would have said, okay, you're just going to have to trust me on this, we need to sell all of 23, all of 24, and potentially all of 25, because we're not going to have this price for a while. Everybody would have hung up. I never would have had the opportunity to be on your show, because I would be in a food line somewhere. It was just the ability of the industry to produce such an enormous crop. And last year, I think, just caught everybody off guard, whether it was the farmer looking at his field and saying, wow, in June, this doesn't look good. And the USDA crop ratings indicated that they were in the, high 50s, very low 60s. Now they're 68 to, I think Mondays were 68% good, excellent for both corn and beans. That there was, a great kind of disparity between what we saw and looking at the rain gauge, what had happened, to then get a 177.3 corn yield in the United States, that this was one of the things that I cautioned everybody about. I said, one thing keeps me up at night, and 2023 is a perfect example. If we have kind of jumped up to that next plateau, that next flight of stairs that production agriculture always has, like we said, all the smart people, all the new genetics, all the great practices that the farmers are implementing. If we have made that jump to now where we can have really, really inconsistent weather like last year and produce a 175 plus crop, then when we have the Goldilocks year that this year certainly is shaping up to be, if we have a 185 yield, everybody is the victim of their own success, which is really, really difficult, because all that corn's out there, because from September of 20 to June of 23, there was always an opportunity. The market gave you that chance. And now the market's just not going to give us that chance.
And the market's not going to believe that there's adversity out there, even when there is, right? Because it's going to be, because last year's a great example. Like you said, we're not crying wolf, but the market's saying, hey, I'll believe it when I see it.
Yeah.
That's kind of what the market's saying.
Yeah, and I think you look at the funds, they have a record short. If you look at what they are short in their position between corn, beans, and wheat, they are short what amounts to about 80% of the entire projected U.S. carryover ending stocks for 24 and 25. And that management, you and I, and we could start a GoFundMe page with all of your listenership. They could all send us $1,000, and we still would not be able to have the kind of impact moving the markets and being able to get things to move in a direction like the funds have, because they have billions and billions of dollars in this. And that's what everybody we love the funds when we're on your side.
Oh, yeah, we do.
Because they certainly, you want to ride that wave higher. But then when, everybody in ag is being the victim of our own success right now with low prices, the funds see that. Everybody sees it. The managed money comes in, and it's and certainly there are arguments, and I've been after meeting with beer in a barn conversations with a lot of farmers. It's funny how this kind of coincided with, okay, we've got to stop inflation. And then the next thing the big thing that is obviously is food. Election year, we're controlling food inflation, and then what happened with that? Not that I think, because the markets are so deep and so wide, and there's so many players in it, that's any part of it. It's just the coincidence of this coming this year, that there is a lot of heartburn in the industry that somehow the stars are misaligned to work against us right now, and it's a simple matter of everybody did their job really, really well last year.
Well, Jody, this has been fantastic. I know one thing for sure: this will not be your last time on the show. We're gonna definitely have you back. This has been a fantastic conversation. I really appreciate the opportunity to discuss the markets with you. Thanks a lot for being here.
Absolutely, Sean. Thank you for having me.